gold just added about $1.3 trillion of market value in a single day. On the exact same day, the Dow closed at an all-time record because peace is supposedly breaking out. Those two things are not supposed to happen on the same tape. One of these trades is scared, and by the end of this brief, you will know exactly what it is scared of. Quick context, 30 seconds. The Strait of Hormuz is a 21-mile wide choke point that carries roughly a fifth of the world's oil. It has been the center of the US-Iran confrontation all summer, and every barrel of oil, every insurance contract, every diesel price on Earth has been paying a war premium because of it. This week, that premium started dying. President Trump said a deal to reopen the strait, quote, could happen tomorrow or the next day. Iran and Oman both say the talks are in the final stages. Treasury Secretary Bessent has been saying a deal could land this week. Markets believe it. That is the setup for everything you are about to see. Here's the shape of it: the deal, the tape, and the warning light. Stay for the third one, because that is where the real story is hiding. First, the deal. This is as close as the two sides have been since the strait closed. The remaining issues are reportedly about managing ship traffic, not about whether ships move at all. That is a technical negotiation, not a philosophical one, and technical negotiations end. Oil traders are front-running the outcome. West Texas crude is sitting near $75 a barrel. Brent is near $78. Both held a two-day slide, even while headlines whipsawed, and that tells you positioning has flipped. The market has moved from pricing war to pricing logistics. If the deal signs, the war premium in oil does not deflate slowly. It gets marked out in days, and that flows straight into gasoline, diesel, shipping rates, airline costs, and eventually the inflation prints the Federal Reserve stares at. Second, the tape. Wednesday's close was a portrait of a market that wants this deal badly. The Dow rose about 400 points to close at a record just under 54,500. The S&P 500 finished flat, around 7,740. The Nasdaq actually fell about 0.5%. Read that spread carefully. The peace trade lifted industrials, airlines, shippers, the real economy stocks. The AI-heavy Nasdaq slipped because even great earnings are getting sold right now. AMD doubled its AI business and fell anyway, and SpaceX dropped 8% despite a beat. So no, this was not a rising tide. This was a rotation. Money moved from the crowded AI trade into the peace trade. Keep that in mind because it makes the third thing even stranger. Third, the warning light. On the same day the Dow set a record on peace hopes, gold went vertical, up more than 4% in one session, to a record above $4,300 an ounce. That single-day move added roughly $1.3 trillion to gold's total market value. Let me say that plainly. Gold is the asset you buy when you are afraid. It just had one of its biggest days of the year during a peace rally at a stock market record. That is the anomaly I opened with, and here is the payoff. Gold is not trading the war anymore. Gold is trading what comes after the war. Peace pushes oil down. Cheaper oil pulls inflation down. Falling inflation hands the Federal Reserve cover to cut interest rates into an economy already running record deficits. Rate cuts plus deficits mean a weaker dollar, and a weaker dollar is rocket fuel for gold. The peace headline and the gold record are not a contradiction. They are the same trade, seen from two different floors of the same building. Stocks are celebrating the end of the risk. Gold is quietly pricing the debasement that pays for everything afterward. So here's the financial angle for you, and remember, this is analysis, not financial advice. 3 things follow from today. 1, if the strait reopens, energy costs fall first and fastest. Diesel and shipping feel it before your gas station does, but it reaches the pump. 2, watch Friday. The July jobs report lands Friday morning, and it now matters more than the deal itself, because a soft print plus falling oil basically locks in the rate-cutting path the gold market just voted for. 3, understand who wins each scenario. A signed deal rewards the industrial economy and punishes the war premium. A collapsed deal snaps oil back up and vindicates gold even faster. Notice something? Gold wins in both worlds if the deficits keep running. That is why it went vertical. The smartest money on earth is not betting on war or peace. It is betting on the arithmetic of government debt, and that arithmetic does not care who signs what in Omen. Which brings me to the question I cannot answer for you. When the stock market and the gold market hit records in the same week, which one is telling the truth about the future? I genuinely want your read on this one, so drop it in the comments. Blue pill. This is the soft landing, peace deal, cheaper oil, tamed inflation, rate cuts, records everywhere. Everything is actually fine, and the gold move is just momentum chasing. That read might be right. Red pill. The peace deal is real, but it is also cover. The debt keeps growing in war or in peace. The dollar slowly buys less either way, and gold at 4,300 is not a fear trade at all. It is a measurement. Neither answer is stupid. Pick the one you can defend. We drop 3 briefs every day, macro at 7, crypto at 9, and AI at 11 Eastern Time. The crypto brief today is a big one. Over $100 million just got drained out of wallets that were sold as unhackable, and it was still happening as of last night. That is at 9. The timeline keeps moving. We will see you in the next one.